Encik Munyandi, a freelance software consultant operating as a sole proprietor in Malaysia, filed his Form B for the year assessment 2024 on time. However, a subsequent tax audit completely disallowed a 40,000 ringgit tax deduction he claimed for business travelling and entertainment. Why? Because he failed to provide any valid invoices, logbooks, or receipts, effectively flipping the burden of proof against himself. To make matters worse, he also deliberately hid a 30,000 ringgit offshore consultancy fee in a foreign bank account.
Part A. Disputing the notice. On 15 December 2025, the Inland Revenue Board of Malaysia, or IRBM, issued a Form JA, which is a notice of additional assessment to Encik Munyandi. So if Encik Munyandi want to dispute this RM 40,000 disallowed deduction, he need to follow a strict legal framework. First, under Section 99, Subsection 1 of the Income Tax Act 1967, he has the statutory right to appeal. Second, the appeal cannot be simply made in a simple letter or email, which means that he must formally file a Form Q. In the Form Q, he must explicitly detail the legal and the factual ground, which is the disputing the disallowed RM 40,000 deduction. Furthermore, it must be personally signed by Encik Munedi himself. This means that his tax agent cannot sign it for him. And for the deadline, he has an absolute 30 days statutory window from the date of the notice, which means that his last deadline is 14 January 2026.
Part B. Late appeal relief. Now, what happens if unforeseen circumstances strike? Let's say Encik Munyandi is hospitalized and misses that January 14 deadline. Does he lose his right to appeal? Fortunately, the law provides a relief mechanism under Section 100, Subsection 1 of the Act. He can apply for an extension of time by submitting Form N in duplicate to his handling IRPM branch. Hospitalization is statutorily recognized as a valid circumstance beyond a taxpayer's control. From there, two procedural outcomes can occur. Scenario A, approval. If the Director General approves from Form N, they will issue from CP 15A, and Chimnyandi is then granted a fresh 30 days from that date to submit his original Form Q. Scenario B, rejection. If the Director General rejects the Form N, the application is forwarded to the Special Commissioners of Income Tax along with a statement of rejection known as Form CP15B. Encik Munyandi would then have 21 days to make a written representation to the SCIT whose final decision cannot be appealed.
Part C. Offshore omission. Finally, let's address the most severe aspect of this case, which is the hidden RM 30,000 offshore consultation fee. Encik Munyandi thought that IRBM wouldn't discover it, but however, starting 1 January 2022, foreign source income received in Malaysia by a resident individual is fully taxable. By deliberately hiding it, he has committed willful tax evasion under Part 8 of the Act. So now let's look at the possible penalties and charge that Encik Munyadi could face. First, willful tax evasion or omission of income. Section 114, subsection 1, subsection A of the Income Tax Act 1967 say that he could be fined of RM 1,000 to RM 20,000 or imprisoned up to 3 years or both, plus treble 3 times the amount of tax undercharged in consequences. Second, auditing and investigation period. Section 91, subsection 3 of the Income Tax Act 1967, because fraud or willful default is involved, the IRBM has no statutory time limit and can reopen his file at any time. Lastly, failure to keep proper record, which is a section 119A A of the Income Tax Act 1967, which means that he could be possibly fined of RM 300 to RM 10,000 or imprisoned up to 1 year or both. So because of the Encik Munyadi is considered willful tax evasion, he could be fined of RM 1,000 to 20,000 or imprisoned up to 3 years or both, plus the treble 3,000 of the amount of tax undercharged in consequences.
Thank
Thank
you.
you.